The best losers win. So here comes the problem. About 95% of the traders lose money. But why? Well, if you ask me, the number one reason for this sad statistic is that most unexperienced traders never learned how to become a good loser. Learning how to be a good loser is a trading skill, one that you must acquire if you want to become a profitable trader. I will explain. Most new traders find it extremely difficult to lose, and even more difficult to lose a few times in a row. The problem is that trading and losing go hand in hand, and there is absolutely no way to win without losing. You see, the problem is that every trading methodology, no matter how good it is, has only an X amount of win ratio, and the distribution between wins and loss in your trading method is unknown. I like to use the example of coin flipping. You've probably noticed that if you flip a coin 1,000 times, it will come up 500 times tails and 500 times heads. This is a pattern. This pattern has a 50% win ratio. Now assume your coin is a little heavier on the tail side, and it will come up tail about 60% of the time, okay? Now at this point in time, you have an edge. You are playing a game with the odds in your favor, yes? Now here comes the question. You have an edge, and you know that 600 times out of 1,000 flips, your coin will fall on the tail side. Is there any way to know in advance the sequence of the flips, the distribution between wins and losses? Is there a way to predict the outcome of the next flip? No, there isn't. And it is very probable, if not even predictable, that you will flip it and the coin will fall on its head side 5 times in a row, even though it's heavier on the tail side. Now, does that mean that the strategy has anything less than 60% win ratio? No. Over a large sample size, 1,000 flips, you know with 100% certainty that the outcome will be 600 tails and 400 heads. Yes? However, the outcome of the next flip is completely random, unknown, and unknowable. Let me recap here because this is big. The flipping pattern repeats himself over and over again with the positive statistical reliability, but the outcome of any individual flip is random. Your trading methodology behaves exactly similarly. You know that if you execute your trade the next 1,000 times, you will come up a net winner in about 600 times, and the outcome of the next trade is random. But you refuse to accept this fact. You don't want to believe that your strategy can lose 3, 4, or even 5 times in a row, even though it is a net winning strategy. Here comes an important statement. Understanding the concept of probability and the concept that your strategy performs best only over a large sample size, and actually functioning from a probabilistic perspective are two very different things. There are traders out there with degrees in probability, and there is no question that they clearly understand the concept of large sample size, but they find it extremely difficult to actually function as a probability thinkers. And since you haven't learned to think in probabilities, you do everything in your power to avoid these losers. You analyze more and more, you skip trades, you hesitate, you pick and choose your setups, you become paralyzed from time to time, you simply try to avoid the unavoidable. Stick it in your head. Trying to avoid something that is unavoidable can have some serious, devastating effects on your ability to stay consistent in this business. I want to take a minute to talk about the patterns on your charts. Let me begin by saying that they all look the same. Second entry long looks like second entry long all the time. Yesterday, today, and next week. So even though your pattern, setups, all look the same, there is absolutely no connection between any of them. And the simple reason for that they are all formed by different traders with different expectations for that moment in time. And so while they all look, feel, and smell the same, in reality, they are different every single time. So expecting them to generate the same outcome every time is simply not understanding what technical analysis is all about. Technical analysis organizes human behavior in patterns. The pattern repeats themselves over and over again with a positive statistical reliability. But the outcome of any individual trade is random and can never be predicted. You see, technical analysis was never designed to tell you what's going to happen next, but rather to organize human behavior in patterns. But you don't use it in that manner. You try to use technical analysis in any shape and form to know what's going to happen next in order to avoid losers. And by doing so, you set yourself up for disappointment. And as we will see soon, a disappointed trader will always lose money. During my daily live streaming, I emphasize this concept over and over again because if there is one crucial thing most traders miss, it is this one. It is impossible to win long-term in trading without losing. It is not possible. That is a fact of life. And the sooner you accept it, the better off you will be. This whole concept of winning without losing almost on a daily basis should be left behind you. In order to stay objective and trade without fear, you must accept the fact that losers are all over the place. And sooner or later, you will have to find a way to accept the true nature of trading, which is random distribution between wins and losses. In our daily live streaming, we keep things simple. Our concept is to lose small and win big. We don't believe in trading for a few ticks. So we lose point or 1.5 or sometimes 2 to make 2 and 3 and 4 and sometimes 5 times what we risk. You have to develop an approach that allows you to see this job as a large sample size business, where the results of any individual trade has no significant meaning and cannot impact your next trade. But how will you do that? How can you transform the way you feel and think about this business? Well, rewiring your brain is a long and complicated process, but it is one you must go through in your trading career if you want to ever become a consistent trader. Here's the problem most traders don't want to face. Even if you do everything correctly with your entries and exit, it is possible to experience 3 or 4 losses in a row. It happens to the best traders out there. But when you have 4 losses in a row and you are not mentally prepared, you will enter a dangerous mental state of mind during which you will be subject to some catastrophic trading error, such as losing patience, taking random trades, skipping trades, taking your profit too soon, increasing your size to make up for the losers, and other trading errors that can be devastating to your trading. All these errors are the direct result of trading with fear. And fear is the direct result of not accepting the true nature of trading, which is probability. Fear-based trading is almost always the result of not accepting the reality of trading. Large sample game. You see, the problem is that trading from a trade-by-trade perspective will have some serious impact on your account. Can't be any other way. Trading is not about winning the next trade. It's about doing the right thing over and over again without making catastrophic errors along the way. As long as you don't rewire your brain and teach yourself to take a loss without feeling that you are a loser, or to be wrong without feeling that there is something wrong with you, you will not be able to trade without fear. And if you trade with fear, even a small amount of fear, you will be unable to remain objective and will make costly trading mistakes. Being a consistent and profitable trader requires a mental change. This change is vital, cannot be avoided, and will have to be addressed sooner or later, preferably sooner. The best losers win because you can't make money in this business without learning how to be a good loser first. Any effort to avoid losers will, by definition, lead you to more and more losers. Which brings me to another interesting phenomena. For most new traders, it is more important to be right as many times as possible, i.e. having a high win ratio, than to squeeze as much money as possible from any winning trade. I will explain. The never-ending chase after a high win ratio is wrong. And it is the result of not understanding that trading is not about being right or wrong, but rather about making as much money as possible when you are finally in a winning trade. You chase a high win rate because what you actually try to do is avoid being wrong. Avoiding the pain you wrongly associate with not being right in the trade that stops you out, and so you are after this feeling good zone of not being wrong in every trade you take. A high win ratio gives you the illusion that you are correct with your analysis and chart reading, when in reality, all you're doing is trying not to be wrong to avoid the pain you associate with being wrong. And in order to achieve a high win ratio, you always take only few points, sometimes even few ticks. You must change this approach. You must look for achieving the most important aspect of trading, which is collecting as many points as possible when you are finally correct with your analysis and you are in a winning trade. The typical new trader will feel extremely uneasy staying in a winning trade and will always prefer to take small profit in order to be correct and feel good about his trading. This, of course, will almost always lead you leaving money on the table by not making enough profit on winning trades for the sake of feeling good about being right, or simply make amends for previous losers. Our brains are not used to thinking in probabilities, but trading is a large sample game in which our patterns repeat themselves with positive statistical reliability, but there is a random distribution between wins and loss that defines our strategy, and the outcome of any individual trade is forever random. By shifting from the concept of chasing the high win ratio strategy, which we already know is the result of fear, and trying not to be wrong and lose, into a big winner strategy, you will be wiring your brain to become less sensitive to losses. What I mean here is that a serious change in the way you think is not something you better do, it is something you have to do. Let me make a short pause here and talk about the desired goal. The best traders out there know that losing and being profitable in trading go hand in hand. There is no way to avoid losses in this business. Losses are part of being consistently profitable, and they cannot be avoided. They simply cannot. The desired goal is being able to lose without allowing it to affect your objectivity, discipline, confidence, and focus. Being able to experience a few losses in a row and still be able to trade from a carefree state of mind instead of fear, loss of confidence, and anger. Considering losses as part of your business expenses is a great way to approach trading. You would not expect to run a successful business without expenses, and you should not expect to run your trading business without expenses. This is simply an unrealistic expectation. Expectation, when not met, lead to disappointment. And when you are disappointed, you are more likely to make trading mistakes, which will inevitably lead to more losses. Do you see the pattern here? If there is a pattern in your trading, this is it. Your first priority in your trading should not be how to become a better chart reader, which has its place, of course, but rather how to change the way you think and feel when you trade, and especially when you lose. This is by far the most important task of every new, inexperienced trader. Spending more time with your charts will never solve this problem. In fact, it will only make it worse. And the sooner you address it, the better. Don't be a victim of your own misconception about what it takes to be a profitable trader. It is not all about technical analysis. The solution was never there. Nobody is born a great trader. You become one over time by adapting changes to the way you feel and think about this business. The best losers win.
Target filled.